Welcome to TheoTrade. This is Don Kaufman. April 30th, 2021. Doing the weekend update here, seconds after the cash close on this Friday afternoon. Hey, we got a little bit of action inside of the marketplace. Well, pretty much just today, a little bit of action maybe yesterday. But I'm going to explain to you in the next few minutes here why you need to get ready for a significant market move, and that's coming sooner rather than later. Let's start this weekend update here with a quick market update, and to do that, you just have to understand that the marketplace over the last 2 weeks is just massively unchanged. We start this weekend's update here specifically inside of none other than the SPX, the mother of all products. I mean, it's like the greatest representation, though, of the S&P 500. What we've actually seen in these three lines on the screen. So what are those three lines indicative of? It's the upper edge of the expected move, the lower edge of the expected move. But here's what you have to know. This central line is where we closed last Friday. So again, last Friday, we basically closed right at this price point of 41.80. And by the way, today we've actually closed pretty much at 41.81. Ooh, I don't know about you, but I think that we've been going absolutely nowhere. And again, here's the previous week and where it started. So if you look at the last really 2.5 weeks, we have done nothing, which is actually going to lead in just a moment here to why you have to get ready for a more significant move. By the way, I'm not handicapping this and saying that because we haven't moved, we're going to move big. It doesn't work like that. And we're going to get specifically, though, into why we believe that a decent sized move is kind of, on the way, and you need to be, as a trader, kind of on the prowl for that more significant move. So as I said, we've done absolutely nothing over the last 2 weeks. How does that look in terms of the NASDAQ? Well, first of all, I've got a couple of orders working in here, but if we take a look at auto expected moves inside of the NASDAQ is actually 3 weeks in. So what you're in effect looking at here, and I'll just kind of bisect the screen for a second. What you're looking at, this is literally 1, 2, 3 weeks, and 3 weeks we've literally gone nowhere inside of a 3-week period of the NASDAQ. Last but definitely not least, pull up the IWM. Well, the IWM was at this level all the way back at, February 1st. So since February 1st, a whole lot of nothing. Again, if you're selling some options premium, you are beautiful, because in selling options premium, of course, the lack of movement, your positive theta, and you're loving every single day that we don't necessarily move. Nevertheless, as I said, get ready for a move. Before I get there, again, tech rocked earnings. Now, this is one of the things, I want to bring up a couple of tech stocks for a moment. When I say they rocked earnings, I mean Microsoft numbers, spectacular, and they sold off into it. Apple numbers, record-breaking, and they sold off into it. Facebook numbers, yeah, record-breaking. The stock popped, but on the fade today. Amazon, everybody saw Amazon's numbers. Now, Amazon, they disappointed in the fact that, oh, come on, everybody was looking for like a split in here. It was going to be spectacular. We're going to laugh. We're going to cry. But their numbers were absolutely shocking. This thing had about almost $150 expected move. It ended up down $3 in the day. Google, again, spectacular numbers, fading off of it. I just wanted to bring this to your attention. Tesla, okay? Tesla, again, kind of a mixed bag of goods since their numbers actually came out. We're much past, obviously, the Tesla earnings, but some sell-side activity, just a little bit of a pop today. Again, the monsters of tech, I mean, the big drivers of the marketplace, seeing the possibility of a key reversal. And I'm also basing this on the fact that there was some pretty extreme volume in here. Clearly, though, that is associated with the earnings announcements that came out. So again, I just wanted to kind of give you a little bit of a flavor, if you will, for tech, because tech literally rocked the marketplace. But when you start looking at the NASDAQ, I mean, net, where did the NASDAQ end the week? And I'll zoom in over here, slightly down. So the NASDAQ was actually slightly down after the most stellar earnings that anybody could have anticipated in, the NASDAQ. All right, moving on to the week in this market's update here. The Fed says nothing and the financials love it. I mean, the Fed literally said absolutely nothing. By the way, they did say my comment, of course, in last weekend's update. Transitory inflation. I love it. I absolutely love the transitory phrase being used. And anytime there's an issue, don't worry. That issue is transitory. Okay, but the financials absolutely listened and loved it. When the Fed effectively said nothing, what it meant is low interest rates, okay, forever. So why did the financials love it? And that's one of the things that you should start to question as a trader is again, we've had implications of higher tax rates. Okay, we've heard implications, of course, of long-term changes, of course, and long-term capital gains. And again, not to put any political slant on this whatsoever, but you would believe, okay, that some of the changes in, of course, tax codes, some of the changes in possibly even some of the real estate codes with like 1031 exchanges might start to put some pressure into the financials, which are holding a huge amount of debt, okay, in those particular marketplace. Not to mention when the Fed said absolutely nothing, literally the Fed said, we're going to do whatever it takes. They pulled a Mario Draghi on us. And still, the financials absolutely loved it. This is a sector that, again, I happen to carry a short position in. So do I have a bias? Absolutely, unequivocally, yes. But I actually stepped in, okay, to an in-out spread specific to Wells Fargo. Literally today, I took a short position in Wells Fargo and looking for continued downside. I think that the financials are an absolutely pivotal sector at this point, because you have to recognize that technology is actually slightly off on the week, and you wonder like how the S&Ps are holding it together. I'll tell you how the S&Ps are holding it together. Capital is just blindly throwing capital into, of course, the financials. When I say capital is throwing capital, is literally, all right, this is just sector rotation, and all they're doing is just, you know, propagating what's working. All right, school of basically what's working right now, and they're throwing capital on top of good capital, and the financials are actually flying, and that is what's actually held the S&Ps together throughout the course of this week. Because hey, when you look down the screen at some of the usual suspects, I mean, there's some damage being done in products like Google on an intraday basis. There was some damage being done in Facebook, some damage, if you will, inside of Apple, and it didn't really negatively impact the marketplace other than the tune of 0.6% in the NASDAQ, because again, the financials, they've held it together throughout the course of the week. It's actually held the S&Ps higher. The most pivotal sector, unquestionably to me, is the financials moving forward. Again, my bias is most definitively bearish in there. All right. So the Fed says nothing, of course, the financials listen. The other aspect, and this one really kind of begs to be looked at. This is one of the larger moves that we've seen in the dollar kind of in recent history. It is an absolute rip to the upside. Again, this is just upstaging almost anything that you've seen recently inside of the dollar. So for those of you that are maybe aware, maybe unaware, I look at the dollar as kind of like a little bit of like a term like risk on, risk off. And when I see the dollar rallying, I almost look at the dollar right now as if it were a VIX. So the dollar rallying indicates, you know, a little bit of a fear trade to me. So I guess the bigger question over here, why is the world moving to the dollar? And then on top of that, if they are moving into the dollar, what's going on inside of the bond market? The bond market, if you will, had one of the more docile trading ranges today, but it also did humongous volume. Again, I got some more questions than answers, and I don't mind coming on here and doing a weekend update and saying just that. The dollar explodes. Bonds do absolutely nothing, but they do nothing on critically large amounts of volume. Okay, again, there's more questions than answers, and this is one of the reasons that does lend itself again to get ready for a significant market move. It's not really the driver of what I'm going to see as a market move, okay, but these kind of do portend that we're ready to rock. Last but definitely not least, volatility is on the move. When I say volatility is on the move, sure, you want to look at the VIX. I know you want to look at the VIX, but the VIX is definitely bid up. The VIX kind of found a floor maybe at the 17 handle. It's bid up to 1863. That's not so much what I'm paying attention to. Okay, volatility futures are bid, but if you want to go even deeper, look down to the bottom of the screen with me. The VVIX is actually right into the VAMA zone. Anything north of the 110 region is construed as the VAMA zone. That means duck and cover, get under your desk, rocking back and forth. Somebody is buying volatility within the volatility index itself, which is a clear and very decisive metric, okay, in terms of mitigating risk. So what am I saying? If you look at the VIX and you come down to the VIX and close that up over here, open up some of the option statistics, okay, there are more calls, of course, being traded in the VIX than puts. And that is normal. Like people get all excited about, oh, more calls than puts by double. You know, forget about put call ratio. That's totally normal. What's going on, though, in the last couple of trading sessions is that people are buying those calls with a bit of impunity, if you will, and that's actually driving volatility of the VIX a little higher. It's indicative of some hedging activity in there. All right, that's it for the market update. Now, let's get down to business, okay? Here comes a move in the S&P 500. Why do we believe a move is coming inside of the S&P 500? First and foremost, okay, risk, it's just accumulating over the last 2 weeks. Okay, when you look at a marketplace, and I'm actually going to do this in terms of the SPX, because I think the SPX is kind of the pivotal way to display this, right? So all we're doing over the last 2 weeks is we're literally trading inside of a range. In fact, you could even throw 3 weeks in here, because all of the trade that's basically occurred has occurred from the level of, let's call it 41.20, okay, up to about 42.10. That's actually a relatively tight range for almost a 3-week period of time. But literally inside of the last 2 weeks, okay, all we're doing is just basically amplifying risk, okay, in one particular level. That particular level happens to be none other than 41.80. Okay, so what's going on at 41.80 that we need to pay attention to? And that this is where people start thinking about this, and they're like, oh, it's this pivot, it's this, it's that. It becomes like a little bit of a self-fulfilling prophecy. First of all, over the last 2 weeks, there were a lot of lower option volume days, but that actually picked up a lot. In fact, last night there were over 38 million contracts actually traded in the marketplace yesterday. Today, I would actually suffice to say that we probably did clear over 40 million contracts, right back on pace. What I'm basically saying, though, so contract size is starting to pick up. So once again, what you got, okay, is this accumulation of risk. And the risk that we're actually talking about is the options marketplace. The longer we actually trade literally in one place, the more risk, okay, that we're accumulating. If you look at this, it's like a little bit of a crescendo. And the more risk that's actually accumulating on that particular level. And what that's actually going to do is it's going to build an enormous amount, just a huge amount of gamma risk. Now, if you're unfamiliar with the term gamma risk, so as I was saying here, risk accumulating over the last 2 weeks, lower option volumes are starting to pick up, so things are really starting to, hit that kind of fever pitch, but that gamma is going to force a significant move. Why is the gamma going to force a significant move? The longer you stay in one place inside of the S&Ps, the more the open interest will actually build there. The slightest move in the marketplace, okay, and again, this is exactly what I'm prefacing in the discussion here. Literally, the slightest move in the marketplace is actually going to cause the hedging dynamic to move markets. Like a hedging dynamic is literally going to kick in and yeah, get ready to rumble. So let me actually explain this though in context when I say that the hedging dynamic is going to kick in. All right, this is all about market making firms and about trading firms. Okay, market making firms and trading firms, which trade in the SPX heavily. Now, a lot of people are probably tuning in, and if you've never actually listened to this, or listened to myself or anybody here at TheoTrade, you have to understand the SPX is the driving force of the marketplace. Why? Okay, the option volume in the SPX, everything else pales in comparison. Like there's just no comparison. Like when people talk about like options and okay. So the SPX did about 1.4 million contracts, which is rocking, and it's 1.7 times the volume that we've done in the previous 5 days, right? So again, about 1.4 million contracts. You go, that's nothing, man. Go look at Apple. Okay, so I bring up Apple. Apple did 1.7 million contracts. Okay, but who's moving more notional value? You're like, I don't even know what notional value is. Here's a $130 stock, right? Here's a $4,000 behemoth. Think about that for a second. The SPX, the options are what? Okay, 40-fold in terms of size and magnitude bigger than what you're seeing inside of something like Apple. Even if you look at like a $400 stock, these options are 10 times the size. And why do I say like a $400 product? Well, I can come over to the SPY, which is an ETF, and the SPDR also traded 4.7 million contracts. By the way, the SPDR is the same thing as the SPX. So for the most part, you have SPDR volume and SPX volume and VIX volume. They're all accumulating to the exact same risk metric, right? So why do we look at the SPX? All right, and we say that the marketplace is going to move, because I'm going to tell you that right now. So over a period of time, if you actually sit in the exact same area, as I was saying, risk kind of starts to accumulate. So you have to look right now at the ball of risk that sits anywhere in this particular kind of arena, anywhere in this arena, that ball of risk is going to be critically large. And when I say that ball of risk, market making firms, most banking institutions, anybody that's construed as too big to fail actually has to trade relatively market neutral, the term with a bona fide hedger, which means they don't take any directional positions. All they basically do is make markets move on or they trade net neutral. What net neutral effectively means is they'll continue to accumulate risk and the ball of risk continues to grow and grow and grow and grow and grow, grow. And the second that we start to move, they have to hedge with the dynamic of the market. That's actually what they call gamma risk, right? It's gamma squeezes and so forth. So the ball of risk right now is absolutely huge. If we were to make the slightest move to the downside, what do the firms have to do? They have to sell into selling. If we make the slightest move to the upside, what do the firms have to do? They have to buy into the buying. Okay, this is, again, it's an incredibly dangerous dynamic because we're ready to move. Now, everybody wants to know, well, which way are we going to move? Now, it is not easy to decipher which way we're going to move. And there's just, especially when it comes to like gamma risk, that's going to be guesswork. Okay. But I will give you my feeling that the fact that, and again, I've got some bearish positions on, and I say this again, without hesitation, I've got all kinds of bearish positions on in this account over here. Nevertheless, when you start to look at the positions, I don't want to let that like influence you that I happen to have bearish positions on. The fact that the dollar moved up, okay, looks a little bit edgy to me. The fact that volatility moved up is one thing, but the VVIX, okay, the market actually sees this. By the way, if anybody really knew that we were going to move down, we would have already moved down. All I can actually decipher out of this is we're ready to rumble. Okay, we're ready to rumble. We're going to make a fairly significant market move, and it looks like it's coming this week. And you know what? People are going to be, oh, a catalyst did it, and this did it, and that did it. Okay, doesn't matter. Forget about catalysts. It's not going to matter. Anything that comes out, okay, could be the catalyst. I mean, listen, the Fed released this week, Google and Amazon and Microsoft and Apple. Oh my! Okay, and none of them, okay, had that impact in the marketplace. But all of a sudden, we start to just keep accumulating like all this gamma risk, and we're ready to rumble. And again, this has everything to do with offloading delta risk. So when I draw this huge ball of risk that exists over here, what basically happens is these trading firms actually receive what's called, okay, negative gamma risk. And to hedge negative gamma risk, again, if we go up, they'll turn around, buy S&P futures, okay, like there's no tomorrow. And if we go down, they're going to turn around again and sell S&P futures like there's no tomorrow. And the bigger the ball of risk, the more the capacity to be able to move. And that's why, in effect, with that dynamic, it's going to kick in this next week. And we're ready to rumble over here. So, call it what you will. It's the end of April. Sell in May and go away. Okay, I don't care exactly what you want to call it. As I said, we're ready to move over here. Couple last words over here, and then we're going to look at the SPX expected move for the week, because I think all that really matters right now is the fact that the marketplace is going to stage that larger move. Okay, and I say all that matters over here. Listen, individual products, neither here nor there. Listen, we scored some big trades this week. We actually scored in terms of Tesla, and we covered those positions for 50-60% gains. We had almost 70% gains inside of Amazon throughout the course of this week. We scalped beautifully the XLE throughout the course of today. We actually turned around and scalped a number of products, including the IWM as well today. We've been hitting pretty much on all cylinders right now. But again, we got to get ready for a decent sized market move. And if you're a premium seller, this is the time where you want to kind of pull back the arms a little bit, alligator arms, and let the move actually kind of take place before you start to go ahead and sell premium. Last couple of things in the docket. Micros are going to change Bitcoin, so get ready for them. They're actually going to be released this next week. So this is actually Bitcoin futures. There's now going to be micro Bitcoin futures. They are traded by the Chicago Mercantile Exchange. If you are into any type of Bitcoin, you should be aware. Again, I believe fully that this product is going to, in effect, change Bitcoin forever, because when the Bitcoin futures come out, they're going to be 1/10 the size of a Bitcoin, which is, if the Bitcoin is, for instance, 57,000, these Bitcoin futures are going to be 1/10 that, so they're going to be $5,700, and you're going to be able to trade them in about 2/100ths of a second. So you're absolutely going to be able to smoke what's being done, like on the blockchain these days. In actual Bitcoin trading is going to be slow. and all the market making firms and banks they're going to get involved in making markets again on Bitcoin micros. I'm telling you, this is going to be an extraordinarily successful launch, but it's forever going to change Bitcoin. So if you're in that marketplace, that arbitrage is going to be hot throughout the course of the next couple of days. I'll explain that more throughout the coming week. Last, but definitely not least, okay, expected move. Something I talk about, again, incessantly here at TheoTrade, but what's the expected move? You know, the previous week, you know, we had an expected move in the neighborhood of the $50+ range, just, you know, $55, $56. Then this last week of trade, and again, I'm just going to kind of mark this up on the screen for a second. This move in this week was plus or minus about 56. And what did we do? We tagged the edge of the expected move and finished the week unchanged. This last week, we had a $61 expected move. It's denoted right there, right? We rallied up. We got absolutely nowhere near the edges of the expected move. And where did we finish the week? 41.81. I mean, you can't even make that up. I mean, literally, the line for this next week is going to be directly off there. By the way, I do not yet have the next week drawn. Why don't I have the next week drawn? Because the marketplace literally just closed as we were, you know, shooting this weekend update here. The marketplace closed. What's the expected move of the coming week? It's going to be 67.13. Again, we're looking at a marketplace move, okay, of 67.13. What I find interesting about this, okay, and you should too. So you're looking at this and you're thinking to yourself like, oh, well, look at that. The expected move is going to be slightly larger. Why is the expected move going to be larger? Why is the expected move going to be larger? I want to know. And everybody's going, well, I have this reason and that reason. Really? If you take a look at the calendar over here, okay, what do you got coming? What do you have? Oh, the employment situation. That's not as big as the FOMC. That's not as big as the fact that Microsoft and Google and everybody else released earnings. I'm telling you right now, the market making side of the business sees the same risk I do. The reason that the expected move is up, because we're ready to rumble. Okay, that's why I'm telling you right now, get ready for a significant market move. It appears that the marketplace is already starting to peek into that. Okay, everybody sees the ball of risk. The ball of risk has grown. I wouldn't be surprised to see volatility expand on Monday and Tuesday before the S&P start ripping around. Keep your hands and feet inside of the vehicle at all times, people, because we're going to make a move this next week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.